In today's show, potential Bitcoin price double bottom can spark a Bitcoin rally to $30,000 despite extreme fear. I'll be breaking this down for you and quoting crypto analyst Philip Swift. The market is not enjoying Bitcoin hanging around 20,000 back into extreme fear today, and quoting Ecoinometrics. The while addresses controlling 1 to 10,000 Bitcoin are starting to accumulate coins on chain again. For sure that won't cancel the bear market, but apparently some people love Bitcoin at 20K. And quoting crypto analyst Mikhail Mende-Pop, Bitcoin regains the entire loss of yesterday as choppy price action takes place. Ethereum prints a higher high even. However, preferably, you'd want to see 20,000 hold. For now and then, a continuation is likely. If 20,500 breaks, I'll see 21,600 as the next target. And this just in, Bitcoin mining difficulty has increased by 9.26% to 30.98 trillion. Also in today's show, Bitcoin whale activity wakes up as Bitcoin hovers just above $20,000. Quoting Sentiment Analytics, as Bitcoin has danced around 20,000 this weekend, a positive sign is the growth in the amount of key whale addresses. There is a correlation between Bitcoin's price and the amount of addresses holding 100 to 10,000 BTC, and they are up 103 in the past 30 days. Also in today's show, top smart contract platform Ethereum can dip below $1,000 before the merge, according to this latest Bloomberg report. Quoting them here, Ether may drop to $1,000 for the first time in 2 months, with volatile price swings in the second largest crypto ahead of its much anticipated merge upgrade. Technical indicators on momentum and price trends show that the token's tumble from a peak of about 2,000 in mid-August to the current zone near 1,500 is likely to continue. Also in today's show, popular crypto analyst Justin Bennett says the latest crypto bump is a bull trap and explains why. Quoting him here, don't be fooled. As things stand, this week's rally is nothing more than a bearish retest / bull trap. Context is king. Also in today's show, the Abra CEO says it's game on for Bitcoin and crypto after the Federal Reserve gives signal for a great pause. That's right, the Abra CEO predicts that a great pause will happen in October, and he thinks at that point and going into the first quarter of 2023, it'll be game on for risk-on assets like Bitcoin and crypto. We'll also be taking a look at the overall crypto market. All this, plus so much more, in today's show. Here at Crypto News Alerts, I drop a brand new episode every single day. I also started doing a $50 Bitcoin giveaway in August, and this is the last one of the month. Congratulations, Marinos. You won $50 I just sent to you in Bitcoin, and the winner from yesterday's episode is Cube. Congrats, you just won $50 in BTC. He wrote the following comment: last giveaway of the August month. Massive congrats to whoever won previously, and advanced congrats who are going to win. Thank you, JB, for helping us to get more insider news. Shorts are really helpful, and Yeep, good luck. Hope I get lucky someday. I retweeted, take one love 100. And if you like receiving daily crypto news like this every single day, make sure you subscribe to the channel, turn on all notifications, Will Smith that like button, and drop a comment right down below. And let's get this crypto, shall we? All right, welcome back to another episode of Crypto News Alerts. I'm your host, JV, and this is podcast episode number 1033. The Bitcoin's price may climb by more than 50% in September, a month otherwise considered ominous for the crypto due to its poor historical returns. That's right, historically, September has been the worst performing month for the crypto market. Now, the conflicting upside signal comes from the potential double bottom pattern on Bitcoin's longer time frame charts against the US dollar. Double bottoms are bullish reversal patterns that resemble the letter W due to two lows and a change in direction from downside to the upside, which you can see here. We get a downtrend, we get a breakout, and an uptrend. The Bitcoin has declined below 20,000 in July, followed by a sharp recovery towards 25,000 and a subsequent return to the $20,000 level in August, partially confirms the double bottom scenario. Now, the crypto would complete the pattern after rebounding towards $25,000. A W-shaped price move is an ideal scenario, which can be followed by another sharp move higher, which is a double bottom breakout. Meanwhile, a double bottom's upside target is found after measuring the distance between the pattern's peak, which is the neckline, and lowest levels, and adding the outcome to the breakout point as illustrated here in this chart. In other words, a potential 50% price rally. Send it. And as a note of caution, Double bottom setups carry a small degree of failure risk, about 21.45%, according to Samurai Trading Academy's study of popular charting patterns. Now, Bitcoin's bullish reversal scenario occurs amid general price depreciation across the risk-on assets. Now, originally, Bitcoin's descent to 20,000 started after the Fed's chairman, Jerome Powell, reasserted his hawkish stance on inflation at the Jackson Hole last week. It further prompted the Bitcoin market sentiment to fall back into extreme fear, a category according to the popular Fear and Greed Index, which I commonly share here on the show. And quoting crypto analyst Philip Swift, the market is not enjoying Bitcoin hanging around 20,000 back into extreme fear today. And checking out the Crypto Greed and Fear Index, you can see we're currently rated a 23 out of 100 in extreme fear. Yesterday was a 27, last week a 25, and last month a 33 in fear. But back to Philip Swift, creator of Bitcoin data source Look Into Bitcoin. The market sentiment is not as fearful as it was in June due to a huge amount of forced selling at now defunct crypto hedge fund Three Arrows Capital and stablecoin project Terra. As shared here, the fear and greed score is nowhere near as intensely fearful as it was when the score dropped to a low of 6. It is currently at 23. And he goes on to share, there was blind panic back then, whereas we are currently in a period of apathy where people are tired of the bear market and are more interested in their summer holidays and or the cost of living crisis. Now, the statement aligns with Bitcoin investors selling their hodlings at a $220 million daily average loss, according to data tracked by Glassnode. Investor psychology appears to be one that is keen to simply getting my money back, with a great degree of spending taking place at and around their cost basis, the on-chain analytics firm stated in its latest weekly report, adding that the Bitcoin bulls are fighting an uphill battle. Now, that includes the whales, entities that hold anywhere between 1,000 and 10,000 BTC that have been accumulating Bitcoin lately as the price wobbles around $20,000. According to data resource Ecoinometrics, as pointed out here, the whale addresses controlling 1 to 10,000 Bitcoin are starting to accumulate coins on chain again. For sure, that won't cancel the bear market, but apparently some people love Bitcoin at 20K. You're damn right, because anything sub 20,000, in my opinion, is a great accumulation zone. And quoting crypto analyst Nick from Ecoinometrics, in this bear market, you want to either dollar cost average in a position or straight up buy the dip and wait. And quoting crypto analyst Mikhail Vendepop, Bitcoin regains the entire loss of yesterday as choppy price action takes place. Ethereum prints a higher high even. However, preferably, you want to see 20,000 hold for now, and then a continuation is likely. If 20,500 breaks, I'll see 21,600 as the next target. Let me know if you agree or disagree with the crypto analyst. And this just in, Bitcoin mining difficulty has increased by 9.26% to 30.98 trillion. And before I break down next of the day, Bitcoin while activity wakes up as Bitcoin hovers just above 20,000, according to on-chain analytics resource Sandsmith. But first, let's take a quick look at the overall crypto market. You can see some of the major cryptos are correcting and some are breaking out back in the green. We got Bitcoin down 0.5% for the day, trading just above $20,300 at the time of this recording. We have Ether up about 0.7%, trading just under $1,600, while Binance Coin, Solana, Polkadot, and Avalanche currently all correcting and in the red, while XRP and Cardano are breaking out and in the green. But all right, now let's break down our next play of the day. Crypto analytics firm Sandsmith is tracking an increase in the number of whale addresses hodling Bitcoin. According to a new post, the data aggregator highlights the uptick in wallets which hold between 100 and 10,000 BTC as a reassuring indicator after the markets tanked last Friday in response to the Fed Chairman Jerome Powell's statements about the economy. And quoting Sandsmith here, as Bitcoin has danced around $20,000 this weekend, a positive sign is the growth in the amount of key whale addresses. There is a correlation between Bitcoin's price and the amount of addresses holding 100 to 10,000 BTC, and they are up 103 in the past 30 days, which you can see in this chart. There are now 15,847 addresses holding between 100 and 10,000 BTC. And when asked for the data about how many of the 15,847 whales bought in since early last week, Sandsmith reported there had been 16 new Bitcoin whale addresses made in the last 5 days. And fellow crypto analytics firm Glassnode also weighed in on the state of Bitcoin by utilizing on-chain data to analyze Bitcoin's adjusted SOPR, a metric that reflects the ratio between the selling and purchase prices of the flagship crypto asset. According to Glassnode, Bitcoin's ASOPR suggests that investors are focused on recouping their investments. Quoting them here, Bitcoin ASOPR continues to face heavy resistance at the break-even threshold of 1.0. This suggests Bitcoin investors are taking profits during bear market rallies and are spending coins at their cost cost basis to simply get their money back. So there you have it. And before I break down next way of the day, top smart contract platform Ethereum can dip below $1,000 before the merge, according to this latest Bloomberg report. But first, let's take a quick look at the overall crypto market cap, sitting just under that critical $1 trillion milestone with about $76 billion in volume. In the past 24 hours, the current Bitcoin dominance back on the decline at 39.2%, with the Ether dominance at 19.6%. And checking out the top 100 cryptocurrency gainers in the past 24 hours, we have Nexo leading the pack up 12.83%, trading at $1.12, followed by Lido DAO up 8.4%, trading at $2.04, followed by Curve DAO token up 5%, trading at $1.16. And checking out the top 100 cryptocurrency gainers for the past week, you can see most of the major altcoins have corrections and in the red with a handful in the green, including Luna Classic up 62.1%. We have BIT up 15.4% and XEC up 14.2%. And I already shared with you the Crypto Greed and Fear Index, showing we're currently rated at 23 out of 100 in extreme fear. But all right, now let's break down our next story of the day. The second largest crypto asset by market cap faces bearish momentum ahead of its much anticipated upgrade, according to a new report by Bloomberg. Now the merge tentative release date is in 2 weeks, literally September 15th. How many of you are currently bullish? Let me know in the comments below. The report says that based on technical analysis, Ethereum can fall by over 30% from its current levels ahead of its transition from a proof-of-work consensus mechanism to a proof-of-stake. The upgrade referred to as the merge is slated to happen sometime mid-September. Like I said, the tentative date is September 15th. Quoting the report here, Ether may drop to $1,000 for the first time in 2 months, with volatile price swings in the second largest crypto ahead of its much anticipated merge upgrade. Technical indicators on momentum and price trends show that the tokens tumble from a peak of about $2,000 in mid-August to the current zone near $1,500 is likely to continue. Now, the leading smart contract platform is changing hands currently, just above $1,500 at the time of this recording, down by slightly over 20% during the past 2 weeks. Now, co-founder of independent research provider Fairlead Strategies, Katie Stockton, told Bloomberg that technical indicators such as the moving averages and the stochastic oscillator are all signaling a bearish outlook for Ethereum. Quoting her here, Ether has broken down below initial support from its 50-day moving average, increasing downside risk with short-term momentum now negative. The weekly stochastics have a downturn for the first time since April, suggesting a retest of support at about $1,000 is likely in the coming days. Now, the stochastic oscillator is a momentum indicator that compares a specific closing price of a security to a range of its prices over a certain period of time. So there you have it. Let me know if you agree or disagree with this latest Bloomberg report that we're likely to see a sub $1,000 Ethereum price around the release date of the merge. And before I break down next way of the day, popular analyst Justin Bennett says the latest crypto bump is a bull trap and explains why, as well as the Abra CEO says it's game on for Bitcoin and crypto after the Federal Reserve gives signal for a great pause. But first, I want to remind you to smash that show more button right below this video in the description for detailed analysis of what's going on in the crypto market. This goes for all 1,300 plus videos right here on my YouTube channel. And if you like receiving daily crypto news alerts every single day, just like this, make sure you're subscribed to the channel, turn on all notifications, Will Smith that like button, and drop a comment right down below. You can also find me on all the major podcasting platforms, from Spotify, home of the Joe Rogan Experience, to Apple's iTunes and Google Play, and of course, all across social media, from crypto Twitter, Facebook, Telegram, Instagram, and TikTok. So wherever you're at, be sure to plug in and follow me there. But all right, now let's break down our next story of the day. A closely followed crypto analyst is warning investors to avoid getting overly excited after the markets bounce off of a flash crash during the weekend. That's right, in a series of posts, Justin Bennett tells his 100,000 plus Twitter followers that he expects crypto prices will continue to fall, noting that the recent recovery can be a bull trap, which lures investors into falsely believing that an extended rally has begun. As he shares here, good morning, legends. Don't be fooled. As things stand, this week's rally is nothing more than a bearish retest / bull trap. Context is king. And Bennett provides two charts indicating that Bitcoin has fallen below the rising channels. The first one tracking since 2014, which you can see right here on your screen. And the second one you can see right here tracking since April of this year. And the analyst next discusses how the altcoins are not likely to be a safe haven due to the larger negative macroeconomic outlook. quoting him here. And to anyone who says that altcoins won't pull back that far, they already did once. Alts have pulled back over 90% during the last bear market, so to think they'll stop at negative 74% this time with raging inflation, a global recession, etc., is naive, in my opinion. And someone responded, but will you eat your own words and say you were wrong if it doesn't pull back 90%? Justin Bennett responded, sure, I have no problem being wrong, but this isn't about calling the exact bottom. I'll be dollar cost averaging if we get new lows. So there you have it. Bennett then offers a pair of charts tracking the total crypto market cap minus Bitcoin. The first looks at the daily candles since May, and the other shows weekly candles dating back to 2016. Quoting him here, don't forget to zoom out left how altcoins look on the daily chart, which you can see here on your screen, and to the right how they look on the weekly. Crypto has lower to go, in my opinion. Let me know if you agree or disagree with the crypto analyst. And the crypto guru concludes his analysis by reminding readers about how the S&P 500 tanked last Friday after the Fed head Jerome Powell announced more interest rate hikes. Bennett thinks that risks on assets don't look promising in the short term, as he shares here a slight rebound from crypto today, but don't lose sight of what the S&P 500 did on Friday. The upside for risk assets is limited, in my opinion. And now let's break down our final story of the day. Despite the downwards price action this week, the CEO of crypto wealth management platform Abra thinks that macroeconomic forces can soon drive bullish price action for crypto. Let's go. Bill Barheit says in a new interview with Thinking Crypto that the Purchasing Managers Index, known as the PMI, indicates the U.S. has been in a recession or is about to enter one. The PMI is an economic indicator that aims to show the health of the manufacturing and service sectors. Barheit says he personally believes that the economy has been in a recession for a quarter and a half. Quoting him here, I think this recession will go on probably until the end of the year. You'll basically see the great pause from the Fed. What is the great pause? That's when you hear something to the effect of, it's fantastic to see that these dramatic rate increases that we have done have been the intended effect of slowing price inflation, blah, 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 blah. Congratulations ourselves, blah, blah, congratulate ourselves, blah, 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 which actually in English means we're in a recession now because the barometers that most of us use to figure that out are understandable to Joe Public. I don't have to say that. We are actually in a recession, so we're going to stop those dramatic rate increases and wait and see what happens, which means we don't know what the F to do, but we're in a recession. Now, the Abra CEO predicts that the great pause will happen in October. He thinks at that point and going to the first quarter of 2023 will be game on for risks on assets like Bitcoin and crypto. Quoting him here, I think it is really going to be game on for equities and crypto as the money supply starts to increase dramatically as a result of the Fed pause and expectations and the bond market that we're going to get back to the kind of downward channel that interest rates have been in for the last 3 decades. So there you have it. Let me know if you agree or disagree with the Abra CEO. And to watch this video he did entitled, How Long Will the Crypto Bear Market Last? Check the show notes below the video in the description. And now for a quick recap, what I covered with you here in today's show. Potential Bitcoin price double bottom can spark a Bitcoin rally to $30,000 despite extreme fear. Also in today's show, I shared that Bitcoin well activity wakes up as Bitcoin hovers just above $20,000 according to the latest on-chain data. We also discussed top smart contract platform Ethereum can dip below $1,000 before the merge according to this latest Bloomberg report, as well as popular crypto analyst Justin Bennett says the latest crypto bump is a bull trap and explains why. And I also shared with you that the Abra CEO says it's game on for Bitcoin and crypto after the Fed gives a signal for a great pause. But where do you feel the Bitcoin price is likely to go next? Let me know in the comments right down below. Now for the top 3 comments from yesterday's episode. Tough Cookie wrote, thanks JV for your daily on point news. We're living through time that sadly most people won't understand till long after it is over. The advice I am taking is be my own bank, spend less than I make, and stack the hardest, scarcest asset in the world, Bitcoin. You got it, fam. Keep stacking them sats. Our next featured comment comes from Freddie Jones. Good updates today, JV. I am not a big believer of price predictions. However, I will say if for some reason Bitcoin crashes to $1,100, I will consider it a blessing and one I will take advantage of in a heartbeat. By this, I mean accumulate and hodl. Let's go. That's right, $1,100 is very unlikely as Kiyosaki predicts. However, if it happens, you already know, fam, mass accumulation. And our third and final featured comment comes from Sailing with Twins. Bro, you can read like a mofo, and thanks for the info. Love your news updates. I think the $100,000 will be here sooner rather than later. $50 in Bitcoin in South Africa goes a long way. Thanks again. Thanks for tuning in. I appreciate your continued support. Be sure to drop a comment below to be featured in tomorrow's episode. I look forward to seeing you there. Peace.